Call the meeting to order.
Good morning.
Good morning.
Good morning.
And Greg, I was going to remind you that I think there's going to be somebody from Cambridge Trust via Zoom. This morning.
Absolutely, we're ready to go for it.
All right, that'll be later. So we have called the meeting to order, and I hereby designate Alberto Manalo as our official minutes taker. I know our alternate trustees are not available today, so we don't need to wander through the Zoom protocol. Has thinned out quite a bit, so we don't need to worry about public input at this point. However, we will reserve time closer to 9 o'clock in case some members of the public do arrive and provide them the opportunity to speak. First thing, may I have a motion to approve the agenda for today?
I move that we approve the agenda for today's meeting.
And a second?
I will second that motion.
Are there any discussions, edits?
None for me.
I think we're
Looks good to me.
go. Therefore, those in favor of adopting or approving the agenda as prepared signify by stating name and aye. Ted Howard, aye.
Alberto Manalo, aye.
Tom Bevington, aye.
All right, thank you, gentlemen. The motion is, it's unanimous. Approval of the minutes of March 24th. Motion to approve those minutes.
Our meeting was actually on the 31st.
Oh, you are correct. So we needed to go back, and I'm going to just quietly make a change to that agenda. March 31st, that's correct. Yeah, that's so March 31st. Has everybody had a chance to read those over?
Yes, I will make a motion to accept the minutes of the March 31st meeting as written.
And I'll second that. Any discussion, any edits, comments? In favor, signify by name and vote.
Alberto Manalo, aye.
Ted Howard, aye.
Tom Bevington, aye.
It's unanimous. The minutes of March 31st, 2026 are approved. Continuing business. So let me, other than we did have, as related to our meeting of the Land Stewardship Committee in early April 8th actually, students related from the UNH related to Spruce Hole Bog, which was very interesting. There being some evidence of, well, they were focusing on a very short window of observations about particularly bird populations, where they had recording devices and then could run the recordings through some software to determine what kinds of birds were there, which I thought was really cool. There was some further discussion about the kiosk signs and where we ended up on that. And this is where the Doe Farm comes in. Ann Walsh observed or commented, she thought that, and she had done this before, that the map was upside down. And I said, I hate she had said that, and I happened to have been out to the question was briefly, should the maps be at these various sites be oriented? So if you're facing to the south, which is the case at Doe Farm, then the map should be pivoted and laid it flat, and you could orient yourself, oh, the graveyard is here. But that means if you have multiple maps at the same sites, every map has to be printed separately
Oriented, yeah.
to rotate. And where the university has maps, and even went to some other towns, locations, and everybody's got the arrow to the north, which surprisingly, as we took a quick poll of the members of the Land Stewardship Committee, and Veronica Ludding, and Rich Ryan, people who made their living, said, oh, yeah. So anyway, that will be a further discussion. That was just one of the interesting things. There was also some discussion about a logo design for the Land Stewardship Subcommittee. I'm not sure where that's headed on that. We had a brief review of some of the literature about off-leash dogs on public lands by Elliot Nog, NG, for his last name. And we ended up tabling any discussion of the herbicide application roundtable, which I described briefly at our last meeting, simply because we ran out of time. So that's the news from the Land Stewardship Subcommittee. Any questions?
Just an
Comments?
observation. The map thing is interesting because I think people are used to the map on their phone.
When I have a map, an application either on my phone or on my car, I turn off the orientation arrow, because if I'm driving into the sun, I want my arrow going down. I'm going south.
Aside from being a little flip, I suppose it ought to consider us, it ought to give us pause. How best do we serve people's needs? If people are more familiar with that orientation, we might want to consider changing our signage at some point.
Yep. The counter to that would be the signs. Anyway, that's a bridge to be crossed. Just as a brief aside, having been hiking around Christchurch, New Zealand once, I became quite disoriented because the sun was moving around to the north, not to the south.
Oh.
I don't remember what the case was. I said, well, Christchurch should be down over that ridge. I said, oh, it's not, because the sun's going the other way. Quite disconcerting, actually. Anyway, that's all I have from the Land Stewardship Subcommittee and related to the DOF, Stratford Regional Planning Commission, and the Lamprey River Advisory Committee, that we had announced our certification and the availability of the management plan on the website, and they were all excited about that. So, here we are. Cemetery Committee.
Well, it's been another quiet month in the cemetery. Perhaps surprisingly, by this time of year, there have been no burials, no inquiries about burials, no sales, no inquiries about sales. And I have nothing new to report about the GIS project. Most of that work will take place this summer. The only cemetery news I have to report is that Ken Mitchell, who heads up the scout troop, got in touch. They intend to place flags there on veterans' graves as usual. I'll provide him a list of the veterans who've been buried there in the last year. But I did not realize, until he mentioned it, that the scouts have been bearing the cost of those flags. And as prices have gone up, they have decided to put smaller flags. Deal of money. It's $200, $300, $400 a year, but
It's $200 or $300 a year out of the scouting.
Right. And he has figured out how to swing it this year, but I think he would be grateful if the scouts were relieved of that burden at some point of the cemetery, in my view. So But the Scouts will place the flags out there the evening of May 13th in advance of Memorial Day. And as usual, my thanks to the Scouts and to Ken for doing so.
Excellent. Which also raised,
What are we? This is April, probably immediately following our May meeting. I'll have to get an agenda together, and I'll have to get in touch with the council reps. So our council reps this year are Daryl Ford and M. Friedrichs and Curtis Register. So I'll have to make sure they're available. Try not to do it when we have a presentation,
Right.
a quarterly presentation, because I don't want those people here all morning. So I will get that agenda together, get the notes from the last meeting together, and get that word out to them, see if, informally, see if they're available, and then actually schedule the meeting.
sounds good. And if you're counting votes for the flags and the support of the Scouts, you can have my support for that.
It's not a great deal of money, but it's a couple $100 that they have to fundraise. And it's I think they had an arrangement with the American Legion for a number of years, and that arrangement eventually dropped off, and now it's a burden on them. And I just think that is not something the Scouts should be solely responsible for. They already do the work.
They do the work, yes. And that alone is, if the town itself were doing it, it would cost them well over that amount of money between the flags and the time of the people required to go out there and get it done. So, excellent. All right, the next item is our items, new business. I checked with Deb Alstrom, and she said there are no expenditure requests for us to deal with this month. So the next item is the monthly MS9 spreadsheet. And people had an opportunity to see the values of things, but there having been no expenditures, I don't know, have we done? I think we've only done like one or two expenditures at all this year.
I think you're right, yeah.
Yeah, we didn't have any.
There weren't any last time.
We didn't have any to approve last.
For approval of the monthly MS9 spreadsheet for the month of February.
Should be March.
It's
right.
March, so the agenda should show that, of the March 2026.
I move that we approve the MS9 reports.
All those in favor indicate with name and vote.
Alberto Manalo, aye.
Ted Howard, aye.
Tom Bebbington, aye.
Reports or issues brought forward by trustees. I suppose we don't have much there. We could probably spend a few minutes on our own dealing with some investment policy questions.
Sure.
And I think one of the things we were looking at last time was the language that would be related to the investment duration. And in our previous discussions about interest rate risk, the language indicated that there would be a discussion at every quarterly meeting and relative duration, but there was no discussion in the old policy regarding what the benchmarks were and how we might be guided. And our discussion with the investment advisor, I got this. Where we are using the Bloomberg Intermediate U.S. Government Credit TR Index minus some fixed bound, and some feedback we got from Cambridge Trust was that probably the percentage thing would work well, then our subsequent discussion centered on the idea, well, if it's a percentage, what happens if that index number gets really big? Now, from our investment advisors is that probably don't need to worry about it ever getting that big that you would worry about it. And if we did, could easily have yet another discussion. So to that end, I spent a little time since our last meeting suggesting the following replacement language, which I'll send to Alberto, so it won't get lost. You won't have to
I
do
appreciate
all
it.
of this stuff. Under the category called risk controls, item 4A, the current language is the trustees will seek to manage interest rate risk actively by considering bond portfolio duration during quarterly meetings with the investment advisor. Decisions regarding duration will be made and recorded in the minutes of the quarterly meeting. To me, that sounds like every quarterly meeting, we have to make decisions and
It's a
record it
standing, a standing agenda item.
yeah, and a continual potentially shifting of that. There's no particular leeway. Trustees will manage interest rate risk by directing the investment advisor to maintain bond portfolio duration in a range of plus or minus 25% of the mean duration of the Bloomberg Intermediate U.S. Government Credit TR Index. The investment advisor will report the portfolio duration plus or minus of the index.
All right. Do we need to vote on that?
I think we probably should. I think we voted on a couple of other previous changes, so we might as well make sure that we vote on that.
Well, I will make a motion to adopt the revised language that you just read out.
All right. Is there any additional discussion? Hearing none. All those in favor indicate in our usual fashion.
Alberto Manalo, aye.
Ted Howard, aye.
Tom Bevington.
Thereby adopt that language into our investment policy. And I've just sent them a specific, and I've got it in my document, and I'll load it into the place, and at some point we will approve the entire document, and it will include these things which have been approved. Now, there was another one. We had discussion about errors and omissions, as I recall. But I don't recall if we had ever insurance for errors and omissions, right?
Yeah.
I was just trying to see where.
I read the minutes of the February meeting when I was away, and Tom prepared it, and I think you addressed it according to the minutes.
I'd have to go back and look at those, but I believe you're correct.
Yeah.
Yeah, I just want to, let's, yeah.
And I think in the IPS draft that you updated, Ted,
I just wanted to be sure that we had voted on it. Let's see. You did the minutes, Tom?
Yeah, I'm looking at them now.
You would-
We voted on the errors and omissions insurance language.
Yeah. So according to the minutes, 2 votes were also taken, 1 to approve the use of the NASDAQ index.
Right.
And then another was to accept a proposed language referencing errors and omissions insurance that was provided by Cambridge Trust.
Yeah. So I think that's the sum total of the I's and T's that I had on this particular document. I was left with an additional question which shows up just, and there being no definition thereof.
Well, since our Cambridge Trust representatives have just arrived, we
Here.
can ask them.
We
A lot of technical terms being thrown out there.
can whoop another question on you. All right. We are approaching
Thank you, Chris.
9 o'clock, and we are still awaiting
Thank you very
the
much.
members of the public who have not. Usually, we have an opportunity for the public to speak at
Yep.
the time the meeting opens, and generally, we are very lightly attended, and we reserve a spot a little later just in case somebody comes by. We haven't been joined by
Thank you, Lisa.
other public people, so we will stick with what we've got.
Thank you.
We will now shift to welcome Lisa and Chris from Cambridge Trust to provide us with a quarterly report.
Is the audio-visual working today?
It is, but your compatriot is not here yet.
Okay.
Okay.
Addendum, there's a question on performance of the strategies, and we just had our composite come out the end of the quarter, so this shows equity income. It'll show the sustainable strategy. So some good information there as the trustees are looking at this.
Submitted, so I just wanted to remind you all of that and see if there were any questions that you had.
All right, we did get the, so the last year's MS-10 has already been blessed and sent in. Mm-hmm. So we're good to go in terms of staying on. And, March wasn't a good month, but
He has
we'll
arrived.
hear more about that.
Fortunately, April was a little better, but yeah.
Yeah, so,
Yeah, but if you have any questions about, actually submitting the ledgers, let me know.
great. Yeah,
So,
it actually,
25. Done yet, so,
oh, I thought, I signed it off and did my
yeah,
part.
yeah. Okay, I'll check again,
Okay.
but when I looked yesterday,
Oh,
they were still not submitted.
all right. And it didn't even show a submission?
No, right,
Ooh.
yeah.
They even made me change my password, so I know I did it.
Oh, okay.
All right.
Yep,
Well, maybe we'll have to wait until they squeak at us and say, well,
there we go.
either that or the town of Exeter is ahead of us.
All right,
Who knows?
all right.
Well, with that, let's
Beautiful.
turn it over
We'll
to,
get things started here. Good morning, Stieg. Can you hear us?
Good morning.
Beautiful, beautiful. We can hear you. So as we've been discussing with the trustees over the past few months, looking at the investment policy statement, make sure everything looks good. The topic of the overall equity investments has arisen here, and we're looking at today. Currently, we're using a little bit of a hodgepodge from an investment strategy. We're using the equity income for core, and we're using our ESG/sustainable mutual funds for international, and that's here. We want to make sure we're in tune with what the town and the trustees are looking at for an investment strategy. So thought of no one better than Stieg Zarl, who is a co-strategy manager for our ESG/sustainable strategy that we have at Cambridge Trust. He's going to walk you through kind of our take to look at it, digest that, and say to us, hey, we'd like to move forward, or we're happy with where we're at, and we can continue to go back and forth, talk about the pros cons on a long-term basis. I did just pass out an addendum on performance, so you can see that. But really, I think Stieg Stieg's been with the company longer than myself, joining in 2000. He covers financials and healthcare as an analyst, a lot of institutional knowledge. So I'm going to kick it over to you, Stieg, and we'll go from here.
Great.
Yeah. Well, maybe
Chris,
before we
oh.
start, Steve, we should introduce
Yes.
ourselves. I think that
Absolutely.
would be useful. Essentially as a resource economist retired from the university.
Hi, Stig. My name is Alberto Manalo. I'm the secretary here. I'm also a retired faculty member from UNH, and I'm an agricultural economist by training.
Hi, good morning, Stieg. I'm Tom Bebbington. I am also connected with the university. I'm the Director of Communications for the College of Health and Human Services, but my background is in financial services. I started my career at John Hancock, and I'm also the chair of the cemetery committee on the town side.
We also have two alternates who are not here, but they will probably certainly be involved in the discussion. Victor Sosa, who's a risk and compliance manager for the university's research office, and James Bubar, who was a executive with a large, I think, a utility company in the Midwest before coming to Durham, and a former town council member. And both of those gentlemen had to be absent today, but we'll share whatever you have.
And our meeting is being recorded, and so I'm sure they'll, view.
The presentation there, or maybe you have it in front of you.
We do have it in front of us, Stieg. So if you just want to tell us the page number you're on, we can follow.
So I'll I guess, start with my bio. I have over 10 years of work experience in sustainable and then pioneer investments as well prior to that. So like I said, over 10 years in ESG related investing. Like Chris said, I've been at Cambridge Trust since 2020. I had the dubious distinction of beginning about 2 weeks before the COVID shutdown started. So sustainable investing difference. I guess my goal is really to give you guys a grounding in how we think about ESG investing within the kind of sustainable equity or sustainable investing platform at Cambridge Trust. So first of all, to be clear, like every other proprietary equity, that investment in client portfolios. So, we have that fundamental bar to start with. But I think what makes us different is the sustainable investing strategy kind of layers on a second round of analysis, or a second layer of analysis. And that's through, as I mentioned before, the proprietary ESG, environmental, social, governance analysis that we take to every single name that ends up in the portfolio, or that we even consider. We reject quite a few. So that's there. So I think maybe one of the questions is, why do we take that extra step? Why do we have that second layer of analysis? And there are a couple of reasons. First, I think that there's an extra layer of transparency that comes with a good ESG company, ESG forward company. That transparency, essentially lowers the risk profile from an investing perspective, from an operating perspective for the companies. And I think I'll borrow a quotation from Sai much more eloquently, but basically, if a company is creating problems for their communities, it's going to catch up to them. And that's, we think that these kind of non-financial risks, that second layer of analysis that we put on a company, the non-financial analysis, kind of their position within the broad array of stakeholders, communities, clients, employees, regulators, all that. If it's, we want them to be good citizens, essentially. And we do think there's a financial reward associated with that. It's not just negative screening. I think you guys probably have heard that, XYZ ESG fund doesn't, the only difference is they don't invest in tobacco stocks. They don't invest in fossil fuel companies. Well, we don't, but we do more than that. So we're not just looking at negative screening. want to underscore that we treat every company the same, and we do a pretty big deep dive on each one before we decide to put it or not put it in the portfolios. And the good thing is, throughout all of this, is disclosures are getting a lot better out there. You know, Europe led the charge 20 years ago, and companies are tremendous at disclosing everything from E metrics, S metrics, and G metrics on down the line. And that's slowly trickling into the US. I mean, some bumps along the road for sure. But the good thing is disclosure is getting better. Data is more abundant, which helps me and the team I work with do our jobs. So we consider a lot of different inputs into our assessment, and that's from obviously the corporate sustainability metrics. We engage with companies, with the investor relations teams, sustainability teams, to learn more, ask questions. We use third-party vendors, third-party experts, and then we try to uncover like non-traditional data sources. Like I'll throw a couple out, like Glassdoor reviews. I have a big focus on that is, and so you know how a company engages and treats their employees is really, really important, and reflects what kind of company that is. So we try to dig into that. We look at Google metrics, you know, word mentions, et cetera, related to companies. In healthcare, there's, you know, run the gamut on things that we consider as inputs into our analysis. If you go to the next page, this slide, it's called Sustainable Equity Evaluation Process, just to make sure. This is really our fund. So, you know, we do kind of work on the idea that past is prologue. I mean, yes, certainly companies can change as managements change. But if a company has a long history of being a good steward of kind of ESG capital, tend to be good going forward. I think where it gets stickier though is what don't we put in? What do we exclude from the strategy? Right off the bat, we don't invest in companies whose primary businesses are tobacco, weapons, gaming, alcohol. You know, thermal coal is a non-starter, oil, fossil fuels in general. And then, you know, one of the metrics that we've been pretty adamant about since the start is to have diversity on your boards. And one of the best ways of finding that out is, and it's reported, is we look at female representation on boards. We think that's a good reflection of what kind of company that is. So those are the yeses and the nos, the goes, the no-goes for us. But there is a big gray area. It's huge, and it seems to be getting bigger within sustainable investing. But so some of the things that are on our radar, and we talk a lot about among the team, are supply chains. You know, supply chains, how companies engage with their suppliers. Do they hold their suppliers to higher standards, as high a standard as they hold themselves? You know, things along that. There are themes that we really are pretty negative on, like products that things that we consider there. We look at the United Nations Sustainable Development Goals, the SDGs. There are 17 of them, and those are good categories that kind of ground us. And like, what should we be thinking about? What is the roadmap for us as we consider? And very controversial. We don't like it, you know, for the deforestation aspects, but you know, that pops up. Animal testing. Two that are pretty going in opposite directions, I would say. Data privacy. That's a big deal. We look very closely at that. If companies aren't, again, to use the word light for us, you know, Meta, the former Facebook, is a good example of that. Nuclear energy, on the other hand, has it's that's pretty controversial within sustainable circles. We have a small investment in Constellation Energy, which a small fraction. There are challenges with the kind of the infrastructure after it ages out, the spent rods and what have you. So we consider all of that. Those are some of the things that we consider, I should say, but our radar is always up, and our analysis usually uncovers that. So if you go to the next page, it's an example of kind of that analysis that I've talked about. This is a company called Veralto. If you're not familiar with Veralto, this is an industrial technology company. It was spun out of a larger company, Danaher, a few years ago, and it primarily operates in two segments. I mean, it's water quality, where they test, treat, and protect water systems. And then the other one is product quality, so barcoding, packaging consultancy. So they make things that could be wasteful, less wasteful on that side. So we really like the company. And the fundamental stories in place. They're high recurring revenue, high margin, and they're taking share within a very important business. But at the bottom line with Veralto is they help protect. You can see from this slide, this are kind of our funnel that we go through. First, it's that fundamental analysis. So if Veralto jumps over the fundamental hurdles and our analyst supports it, recommends a buy or sell, but in this case, a buy. Assessment that I'd alluded to before, but for Veralto specifically, they have really robust governance stamp practices. Their ethics oversight really stands out. They have an independent board of directors. We spend a lot of time kind of parsing the and ultimately their product lines are all about sustainability and kind of safeguarding this critical water infrastructure. And they also get immensely high marks on labor relations. So again, we look very closely at controversies in each one of the companies, and those controversies can come from anywhere. It's employee complaints, high employee turnover, lawsuits, on down the line. Our analysis hopefully captures the gist of the controversies, and obviously we're looking for low controversy companies throughout the process. So Veralto certainly qualifies there, and we obviously go through the pretty rigorous valuation metrics and then decide buy or no buy. In this case, we bought Veralto, and we like the investment for the long term. Again, it's going to have its hiccups here and there, but this is a company that's gaining share, that has a tremendous ESG profile, that we like and we think fits with kind of our approach very closely. And then final slide, won't spend more than a minute here, but it'll give you a sense of companies we like and companies we don't like. I talked about Veralto, NVIDIA, the semiconductor superpower, kind of fueling the AI for them. Is they're a multinational company in a booming industry, and their corporate ethics practices and anti-corruption policies are extremely strong, among the best that we have seen in our work. On the flip side, Wells Fargo, you guys are them a pass by any means. And then Meta, I referenced, just very difficult data governance practices and other things along the way. So those are two names that you will not find in the management and the change in philosophy, but for the time being, neither Wells Fargo nor Meta would find their way in. So that's kind of the four slides I had. Happy to take questions or hear any feedback. But
Appreciate that. Helps me understand more about how it's put together, for sure. Alberta, do you have any question, or Tom?
Well, I guess my question is, for us, what the approach that we should take with regard to this, Of course, we want to maximize our returns as much as possible. But how do we strike a balance, in pursuing this strategy?
Steve, I think would be
I'm
helpful.
interested in what your clients, what their approach is.
If you want to talk about,
Yeah.
obviously answer this, but I think another way of answering it would also be looking at some of the beta of the portfolio relative to, maybe do a little quick analysis. Okay, we bench off the S&P 500 for this. Maybe some of the expectations around that. Obviously, we're probably going to be a little bit more growth heavy, technology heavy here relative to other strategies, but maybe, and then to kind of then put it in perspective of where they are right now with equity income, which is a little bit more defensive, more value. I think it would be helpful to kind of understand as they wrestle with this decision.
Equity and equity income is, as Chris said, different benchmarks. So sustainable equity uses the S&P 500. We also have a secondary benchmark, which is an iShares, an ESG specific benchmark as well, Dividend Achievers Index. So the big difference is between the two, and there are a lot, really comes down to the weighting in kind of higher growth sectors. So for instance, on the flip side, in the dividend, in the equity income benchmark, it's 24%. So, it's a 12% difference, I guess, or a 12-point difference between the two, which is pretty significant. So as a result, and big companies like NVIDIA are big there. So the other thing is in communication services, that's where you would find Meta, and Google. That's where they sit. That's 3 times the size in the S&P 500 versus in the dividend benchmark. So I guess my point here is the sustainable equity benchmark is much more weighted towards growthier, kind of more innovation in terms of technology companies than the dividend benchmark. So much more of a growth related fund, growth-like fund, which is, the S&P has morphed into that over the last 3 years during the AI boom. One of the bigger differences is the dividend profile of the two. So sustainable equity pays or receives a dividend of around 1% right now. And equity income is 1.9%. So, again, the income focus certainly leads to a higher dividend return basis. So not just price return, but including the dividend benefits as well. If you look over the trailing 3 years, sustainable equity has done better, but that's largely because of we're more exposed to as a very poor year in the market, and that was a poor year because technology had a tough year, so we underperformed equity income in 2022 pretty substantially. Again, because of the lack of technology exposure or the lower technology exposure. They're very close to a market beta. We tend to be a little bit higher, relative to their benchmark, close to neutral with the benchmark. But sustainable equity is a little bit riskier again because of the kind of the.
I have a lot to think about. I'm not sure I have a question at the moment. Thank you.
Yeah, I just had a couple, you mentioned the higher exposure to AI, and some of my more recent readings skating out on the ethics of the algorithms and their potential to wreak some havoc in lines of, I guess the way to describe that is the ability of those algorithms to begin screening people relative to employment, insurance, college admissions, in effect removing, being predictive of things which are taking of algorithms as opposed to looking at the whole person, interacting with those people, and I can think of some hires we've done at the university where if we had used an AI algorithm, we would have filtered out some people. And somebody's got a new book out on that, which I mean to get a hold of. So it just gives me some concern about, yes, AI is going to do perhaps some good things, but there are some ethical issues involved here. And I wonder if you all have given some.
Graduated from Brown University a couple of years ago, and the president, Christina Paxson, in her speech, got up and read for like 2 minutes a very dry, dry welcome, and then she proceeded to read what she had written. So much more eloquent and personable. And her line was, that I'll never forget, is, "Don't take the human out of humanities." And I think that's what we are grappling with in business. And they tend to be knowledge workers, right? Higher educated software engineers are the most at risk. Quite frankly, and we've seen companies lay off there. So we definitely wrestle with that. I think as a team, the sustainable investing team, we're looking for companies that are going to strike a balance and kind of harnessing the power of AI to augment human efforts and make human output more efficient, as opposed to replacement. So I think we're not at that point yet, but we're slowly seeing AI agents push humans out of jobs. I think the watershed moment, though, from an investment standpoint, will be when OpenAI and/or Anthropic both go public, perhaps this year, perhaps early next year. And they're the ones who actually build the models, the LLMs, that companies would use to replace a human with. Right now, our approach to investing in AI has been more, data center, Arista. They make switches that are resident in data centers that kind of divert data in the right direction, where it's supposed to go. That's been our approach right now, picks and axes. We will invest the sustainable equity team in OpenAI or Anthropic when they come for just those kind of ethical issues that you're talking about. We very well might, but as this builds steam, these are questions that we talk
about. Anthropic, which had tried to put more boundaries on the use of its AI model, and going back to your list of no's, where there's a weapons category, and AI's potential to be used in that way. And I think we're going to have to puzzle about this more, but it's, I think, been very helpful for us to see how the sustainable strategy works at Cambridge Trust. And now we'll have to think more about what do we want to do about it, if anything. Our current policy mentions an ESG benchmark using Morningstar of somewhere about average, which means, and so I'm not sure where your would be on the upper end of that benchmark.
Yeah, we tend to have above kind of top quartile peer performance from our internal tracking data, relative to like ESG funds, and we do pretty well relative to the benchmark that I talked about.
All right. Additional questions at this time?
None from me.
Yeah, none for me, but I did want to say thank you. I do appreciate the care and thought involved, and then make sure that the town council, which ultimately gives us direction, understands, when they say, hey, think about ESG, that what that would actually imply. I think you've given us, though, a very good grounding in helping guide that discussion. So I just want to say thank you.
Yeah, thank you very
Yeah,
much.
thank you very much. Appreciate it.
Yeah, stuff. So if you need it, just let me know.
Excellent.
Appreciate it.
so
Thank
much,
you.
Stieg.
Thank you.
All right. Thank you.
You're welcome to stay for the rest of it, but you may have already heard all the
I'm
rest
off
of it.
to catch a train into Boston.
Take care.
Bye-bye.
Thank you.
Because it's not just the ESG part, it's almost the ESG lead